Let's address the elephant in the room. Why does Kaspa sit at roughly $2 billion in market cap, while projects with weaker fundamentals command like 10 times that valuation? The answer starts with how KAS entered the market. Skibum Trading, a commentator who's been tracking crypto markets for years, pointed out something crucial. Kaspa has zero pre-mine, zero pre-sale, and zero locked tokens waiting to crater the price. Every single KAS coin was either mined or purchased on the open market. That's it. No insider allocations, no venture capital firms sitting on mountains of tokens they bought for pennies. Think about what that means for price action. When a project has 40% of its supply locked up with early investors, you're not trading on fundamentals. You're trading against a ticking time bomb. Those unlock events can wipe out months of gains in a single day. Kaspa doesn't have that problem. This structure creates a completely different type of holder. People who buy KAS enter through the same door as everyone else. There's no two-tier system where insiders laugh while retail holds the bag. That builds conviction. It builds community. And it builds price floors that actually hold during market turbulence. Skibum described it as a fair system where every participant enters through the same gate. That's not marketing fluff. That's structural design that protects you from the rug pulls and exit liquidity schemes plaguing this space. Now, here's where it gets interesting. Because Kaspa avoided venture capital, it also avoided the marketing machine that comes with it. No paid influencer campaigns. No coordinated exchange listings timed for maximum extraction. Just organic growth driven by technology and word of mouth. Before we go further, if you're finding value in this breakdown, smash that like button right now. It tells YouTube to push this analysis to more people who need to see it. And if you're not subscribed to TJ Crypto World yet, hit that subscribe button and turn on notifications. We're cutting through the noise in this space every single week, and you don't want to miss what's coming next. All right, let's dive into the Bitcoin parallel. We're going to talk about comparisons here. You see, the most compelling case for Kaspa actually comes from its similarity to Bitcoin. And no, I'm not talking about the price. It's all about the philosophy. So, DCE, an analyst who's been digging into proof-of-work networks since 2017, believes that Kaspa has cracked something that most developers just threw in the towel on: the blockchain trilemma. You've heard it before: decentralization, security, scalability. The classic pick two scenario. Well, except Kaspa didn't pick two. Here's the thing, right now, Kaspa is processing blocks every single second. Not every 10 minutes like Bitcoin, and not every few seconds with some compromise on decentralization. We're talking every second, while still maintaining the same proof-of-work security model that made Bitcoin, well, revolutionary. And it's about to get faster. The Dagnite upgrade pushes this even further, potentially hitting multiple blocks per second without sacrificing the core principles that matter. DC called it the biggest phenomenon he's seen in crypto since 2017. Those aren't casual words. This is someone who watched Solana trade under $1 before its breakout. Here's the parallel. Kaspa carries Bitcoin's DNA: fair launch, proof of work, true decentralization, but adds the scalability needed for real-world adoption. It's not trying to replace Bitcoin. It's trying to be what Bitcoin would look like if it launched with 2025 technology. That positioning matters. Bitcoin maximalists respect the approach. Tech-focused investors see the scalability. And retail is starting to notice the price action. KAS went from half a cent in 2023 to 7 cents in 2025. And we haven't even hit the main adoption phase yet. Now we get to the math that makes traders, really salivate. Kaspa sits at roughly $2 billion fully diluted. Compare that to projects in the top 20 that have, honestly, weaker technology, more centralized governance, and massive insider allocations. The disconnect is, well, pretty staggering. Skibum Trading called it an asymmetric bet. In trading terms, that means limited downside with exponential upside. When you buy a $50 billion market cap coin, doubling your money means it needs to hit 100 billion. A near impossible feat. But when you buy a $2 billion asset with solid fundamentals, doubling just means reaching 4 billion. That's like a Tuesday for projects that catch momentum. But here's the part that should really raise your eyebrows. DC mentioned that some analysts have actually admitted being paid to exclude Kaspa from their comparison charts. Let that sink in for a moment. There are people in this space actively suppressing information about KAS because it threatens their preferred narratives. or, their sponsor relationships. That kind of coordinated silence, usually happens when a project threatens established players, when insiders know something that retail investors just don't. And honestly, when the upside is real enough that people want to protect it. The forward-looking case, well, it adds another dimension. Kaspa is developing an open-source Layer 2 solution. When that launches, KAS becomes the gas token for DeFi applications, smart contracts, and decentralized exchanges built right on top of the network. That's not just speculation, that's actually the roadmap. Imagine, for a second, Bitcoin-level security with Ethereum-level functionality. That's the vision here. And if it delivers even 50% of that promise, we're talking about a top 10 project by market cap. If this analysis is clicking for you, do me a favor. Hit that like button if you haven't already. Share this video with someone who's been asking about Kaspa, and subscribe to TJ Crypto World so you don't miss our next deep dive. We've got breakdowns coming on projects most channels won't touch because they're not paid to promote them. You deserve better than sponsored content disguised as education. So where does that leave us? Kaspa isn't the flashiest project. It doesn't have celebrity endorsements or Super Bowl commercials. What it has is a fair launch, proven technology, and a community that understands long-term value over short-term pumps. Whether KAS hits $1, $5, or higher depends on execution, market conditions, and adoption curves we can't fully predict. But the foundation is there. The code is open source. The distribution is fair. And the analysts paying attention, the ones not getting paid to look away, are saying this could be one of the most undervalued assets in crypto right now. That doesn't mean you should mortgage your house and go all in. It means you should do your own research, understand the technology, and decide if Kaspa fits your risk profile. Because in 5 years, you'll either be glad you paid attention early, or you'll be explaining why you ignored a $2 billion project that solved problems most developers gave up on. Thanks for watching TJ Crypto World. If you want more unfiltered crypto analysis, check out our video on projects that are actually building during the bear market. It's linked on your screen right now. I'll see you in the next one. Stay sharp, stay informed, and never let anyone else do your thinking for you.